This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
An historic day. The bulls charge ahead as stocks rally to all-time highs. Where to put your money now? We'll get stock picks for this lofty market from top money manager Mario Gabelli.
Stocks were so hot, and so was hiring. A better-than-expected jobs report fueling the game. So, is the economy healthier than many think?
And tonight we'll meet the man who solved the riddle of how to take a simple idea and turn it into a very successful business. All that and more tonight on Nightly Business Report for Friday, May 3rd. Good evening, everyone. Susie, stocks soared at the outset and kept on going pretty much right up until the close. A perfect day for you to be at one of the biggest investor events of the year.
You're absolutely right, Tyler. Good evening, everyone. I'm here in Omaha for Warren Buffett's Berkshire Hathaway shareholders meeting, and he is sure to get lots of questions tomorrow about the outlook for American businesses and for the markets. Well, stocks powered the Dow and the S&P 500 to record highs on positive news about the labor market. For the first time ever, the Dow traded above 15,000 and the S&P closed above 1,600. And for the S&P, this one was a long time coming. The index first closed above 1,500 in March of 2000, so it took 13 years for the benchmark to crack this new psychologically important level. And here are the numbers. The Dow surged 142 points today, but closed just below the 15,000 mark. The Nasdaq jumped 38. The S&P rose 16 points, closing at 1614, a new record high.
Well, Susie, investors snapped up stocks on news that American businesses added more jobs than expected in April. 165,000 to be precise, with the unemployment rate falling to 7.5%. Average hourly earnings up 0.2%, and job numbers for February and March were revised sharply higher. We have two reports looking more closely at that surprising jobs report and today's reaction on Wall Street. We begin with Bob Pisani at the New York Stock Exchange.
It was the shot heard round the world. Traders had convinced themselves that the April jobs report would come in well below even lowered expectations. And when the report came in far stronger than expected, with prior months also revised upward, the markets reacted immediately. S&P futures moved up more than 10 points in a couple minutes. Seconds after the open, the Dow and the S&P were both at historic highs. Over in Europe, the German stock market moved over 100 points on the news. That's about 1.25%, and closed at its high a couple hours later. Stocks opened up and stayed near their highs throughout the day, with volume above normal and 3 stocks advancing for each one declining. Traders especially bought economically sensitive stocks like U.S. Steel, truck maker Cummins, Beazer Homes, and Caterpillar. Techs also shined, with big moves up in semiconductor stocks like AMD, Micron, and Teradyne. Storage device maker Seagate closed at an historic high after a strong earnings report on Wednesday. Copper, a critical component of the global economy, was up over 6%, its best showing in 18 months. Can we go any further? Well, the bulls note this is not 2007. Stocks are not overvalued as they were then. And the markets have two things going for it that it didn't have in 2007. First, the Federal Reserve. And second, an investing public that simply does not believe that this rally is real. And that skepticism may be the best friend the market can have. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange. And now for more on the jobs report, let's go to Hampton Pearson in Washington.
The April government employment report paints a picture of a job market that has been improving more than most economists thought. At 7.5%, the unemployment rate is now at a 4-year low. That's because total employment, as measured by the government's household survey, increased by 293,000 last month.
We saw that decline in the unemployment rate, and this time it happened because of stronger job growth. So all in all, I take a lot of optimism away from it.
The big winners, restaurants and hotels, adding 45,000 new employees in the past 2 months. Places like Osteria El Asir, where Gennard Crawford just got a job this month.
Been unemployed for a little while, and you know, the economy is catching back up. So, yeah, it feels really good. I have 2 kids, so really important for me.
Today at a Washington, D.C. employment office, we found job seekers checking out prospects online. Some 210,000 people nationwide went back into the labor force in April. People like Quentin Gordon, out of work since the first of the year, but still optimistic.
Before this month is out, I'm sure I'll be employed and working.
The economy's been creating an average of 208,000 jobs a month for the last 6 months. But top Obama administration officials worry the sequester will reverse that trend.
While we continue to see an expansion of the economy, continue to see private sector job growth, I think if it weren't for the sequester, the economy would be in even a stronger position. That increased consumer spending produced April hiring that was broad-based. Only construction and the government were sectors where we lost jobs. For Nightly Business Report, I'm Hampton Pearson in Washington.
Who better to tell us what all this means but Mario Gabelli, the CEO of Gabelli Funds, and Diane Swank, chief economist at Mesirow Financial. Sorry, Mario. Ladies first. Diane, you get the first question. In all of the job numbers today, were there any soft spots? Were there any signs of weakness in there that you could point to?
Well, you know, as good as the numbers were, and I certainly celebrate, especially the backward revisions, the composition of job growth is still very heavily weighted towards low-wage jobs. And we'd like to see a reversal in that because we lost a lot of high-wage jobs to the Great Recession, and we've not seen that yet. In fact, 3/4 of the jobs created since the recovery began have been in sort of retail, manual labor, food preparation, where we saw a lot of the jobs created today, in-home healthcare, where we also saw jobs created today. So, you know, although we're grateful for those jobs, a lot of them are on part-time. The long-term workers coming off their long-term unemployment, that was great, but then we saw a surge in the number of workers having to accept part-time instead of full-time employment for economic reasons.
So these are sort of the partly employed workers.
Exactly.
We also see a fair number of discouraged workers, people still staying out of the workforce, not jumping in, right?
Exactly. There still is a large number of discouraged workers. They're down from a year ago. That's the right kind of trend to see. And this was a good reason to have a fall in the unemployment rate, a real improvement in the unemployment rate. So that's the good news. But, you know, this composition and the part-time nature of it is still something we worry about. And, you know, I think this is something we have to be concerned about going forward, because the longer people are out of the workforce, we're seeing the really long-term unemployed are unable to rejoin. And there's a lot of collateral damage that goes into the economy.
The revisions for the February, the March and February numbers were significant, 114,000.
Unbelievable. To have a month over 300,000, I mean, hallelujah.
I don't mean to nerd out here, but how do you miss 114,000 people?
Especially when a lot of them work for the government.
Yeah.
I mean, I'm sorry, that is really hard. And, you know, it really gets to the issue of how much of a margin of error we're dealing with here with these jobs numbers. And, you know, that's part of the problem is, you know, fool me once, shame on you, fool me twice, shame on me. Well, shame on me now, because these numbers have fooled us more than once. The good news is the revisions are going on the upside now. We'd much rather have them going on the upside than downside. The other part of the numbers I think we need to point out is that they decelerated. Even though March was a great month, all of a sudden, I mean, February was a great month, March and April did decelerate.
Slowed from there, from the winter pace.
They absolutely did. And April seasonals kind of favored some of those gains as well.
There were a lot of economic numbers that came out this week, and of course the Fed met and said we stand ready.
And don't fight the Fed.
And we stand ready either to add to our bond purchases or constrict those bond purchases. Sum up the week's economic data for us.
You know what, we're still sitting a very uneven recovery, and that's why the Federal Reserve still stands ready to do something. And what they would do less if they had complementary fiscal policy that was helping the economy. Right now we don't have that, and so without that they're willing to do more, but they are limited in what they can do. And they're starting to discuss that. Are they being effective at what they're doing? That said, they're going to keep the pedal to the metal right through June and right through the summer. I think we're going to see this Federal Reserve with low interest rates for a very long time to come.
The job numbers that we came out today, let's circle back to where we began. Give it a final grade. Is it an A? Is it a B+? Is it a B? What is it?
It's probably a B, which is better than we've been. We've been in sort of a C minus economy, but I never got a B when I was in school.
Diane Swank, thank you very much. Great to have you in the studio tonight
Thanks
for us.
Thanks. Nice.
Susie, out to you.
Thanks a lot. So let's turn now to Super Mario Gabelli. Mario, you're a value investor. Is it getting harder for you to find value in a market like this?
Well, you know, we constantly look at annual reports, visit a lot of companies, and there's always something happening, particularly in the small and mid-sized cap companies. So it's exciting, it's good times, deals, mergers, financial engineering.
Well, by contrast, you're here in Omaha because of Warren Buffett's Berkshire Hathaway annual shareholders meeting, and this is a huge company. Actually, just a short while ago, they reported their earnings. Shareholders will be happy. The numbers came in way bigger than expected, both on the earnings and the revenue side. The stock today hitting an all-time high. It is now at $162,000. It's up 21% so far year to date. Would you tell investors to put new money into Berkshire Hathaway at this level?
Well, Susan, when I started our Gabelli Asset Fund, our first open-end mutual funds, we bought it was probably less than $3,000 a share. And during that last 25 years, you've had ups and downs in the world. At $162,000, I probably would want to own it. I want to keep it for the next 5 years, but I may not buy my entire position today. Book is $120,000. They're going to make $10,000 a year for the next 3 or 4 years. Book will grow, and I think it'll do okay over the next 10 years.
All right. There are some other value stocks you wanted to tell us about. Top of your list is Viacom. Reported earnings this week, not so good. Why do you like it?
This is a entertainment company. You know it as Nickelodeon. You know it as MTV. They own the Paramount Studios. Great cash generator, very little capital expenditures. They take the cash and buy back stock. And over the next 3 or 4 years, I think you'll make 50% plus. That's 17% a year. That's quite good.
So it's at $68 now.
Yeah, the VIA, the voting stock, is $67 or $68,
right.
And I think it'll be $100 in 3 or 4 years.
All right, tell us about the next one, Mondelez, ticker symbol MDLZ. Interesting backstory on this one. Why do you like it?
Well, Mondelez was a spin-off from Kraft, financial engineering. Irene Roosevelt went out and bought Cadbury, which is chocolates. She put it together with the Mondelez products, which were the global products. Now she has a global company, stocks around $31, earnings will grow in the double digits over the next 5 years, and will capture, and Susie will capture the growing middle class in both India and China, a great global play.
And it has a lot of the basic things that people always want. You said chewing gum,
well,
chocolates.
Biscuits,
cookies,
confectionery, and chewing gum. Those are very large categories, growing very nicely, and they have very good positions globally. And plus you have Nelson Peltz buying some stock, and maybe they'll merge.
That always helps.
And maybe they'll merge. So the stock has not lost sight of this.
All right, let's talk a little bit more about Berkshire Hathaway. So you've been coming here for 10, 12 years to these meetings. What do you want to hear from Warren Buffett tomorrow?
Well, it's basically reinforcing the notion of how capital is allocated, concepts like where is he looking to put money, why does he like companies like Heinz, why did he put $12 billion, $8 billion in the preferred, $4 billion in the equity, and not complicated. He's made 20% CAGR for 40 years. So if he only does 10 compound annual growth rate on book, if he only earns 10% over the next 10 years, our clients will continue to double their money, plus we're large shareholders.
So what do you think he's going to say? What do you think is going to be the big headline from Warren Buffett tomorrow, whether it's about the markets or the economy?
Well, you know, Warren always likes to tweak something, whether it's the notion of the flavor of the day, which is dividends. Why not pay a dividend? Why not split the stock? What is he going to do with his $56 billion that he personally owns of the stock? And where is he going to make acquisitions? And what is he going to do with regards to the operating earnings? The housing market's booming. He's going to benefit.
There are going to be 35,000 people here hanging on his every word. We'll see you there tomorrow.
We'll be delighted to do that, and we'll do the same.
Thank you so much. Mario Gabelli, CEO of Gabelli Funds.
Well, Susie, you think of them as patrolling the skies in Afghanistan or Iraq, but unmanned aerial vehicles, better known as drones, may soon be coming to the skies above you, and in a good way. The Federal Aviation Administration is opening American airspace to more drones in 2015, and they'll be commercial, not military. And with that increase, John Fort tells us, the industry is looking at not only creating more drones, but more jobs.
First, you screw the motor on here.
Chris Anderson left his job as editor of Wired magazine last year to chase what he calls a huge idea: planes that fly themselves. You and I call them drones, and in a struggling economy, they're the type of fresh idea that might provide a nice lift. The industry claims it could create as many as 100,000 jobs, adding $82 billion to GDP in the next 12 years. Anderson's company has gone from 0 to nearly 100 employees. And he's not alone. AeroVironment, a drone maker based outside LA, has seen its sales grow tenfold.
About 10 years ago, we had between 200 and 300 people. Today, we've got somewhere around 750 people. So it's been a significant growth period over the last decade.
The key growth market for drones? Farms. It turns out self-flying planes are an ideal way to check for diseased plants or even do some crop dusting. Outside of privately owned farmland, there are some limits to how quickly the business can grow from here. There's public perception, which pegs drones as military tools or privacy violators. And then there are regulators who have a little over 2 years to draw up rules governing how they're used. Before they can do that, they've got to run tests. And a key deadline to apply as a drone test site is coming up Monday.
But the drone industry isn't just targeting farmers and big business. Startups like 3D Robotics have personalized models that a hobbyist can get for less than $1,000.
Anderson believes it's ultimately going to be creative users of low-cost drones that define the market, like mainstream users of personal computers did a generation ago.
We put advanced technology in the hands of regular people, and they figured out what it's for.
For Nightly Business Report, I'm John Ford.
Even the FAA acknowledges that the growth potential in drones. It projects that in the next 5 years, we could see as many as 7,500 small UAVs in commercial use. But with 34 states currently trying to pass some form of anti-drone legislation, both the industry and the FAA could face an uphill battle. Well, still ahead, meet the man who quit his job, risked it all, and became eventually America's wordsmith. But first, on this record-breaking day for stocks, a look at the top-performing S&P stocks year to date.
On Wall Street today, most of the Dow stocks, not surprisingly, were in the green, but JP Morgan was one of the exceptions, and that's where we begin our market focus. The giant bank was down on reports that regulators have found that one of its units manipulated trading in the electricity markets. JP Morgan denied its employees did anything wrong. Shares of JP Morgan lost more than 1% to $47.57. Moody's Corporation reported quarterly profits that were way above expectations, and the firm raised its full-year outlook thanks to a pickup in corporate bond offerings, and that means more demand for credit ratings. Shares touched a 6-year high before closing up more than 3.5% to $62 and change. Shares of discount brokers did well today as investors bet that companies like Schwab could benefit from a surge in trading fees and commissions. Schwab itself traded near the top of the S&P 500, gaining more than 6%. And in a rare move today, shareholders of Occidental Petroleum voted out longtime chairman Ray Irani at the annual meeting. Irani ran Occidental for more than 20 years, but his lavish pay packages angered investors. Shares gained more than 3% on the news, closing at $90.76.
On this Jobs Friday, a story about someone who chucked it all, quitting a good job because he wanted to create games, word games. And he's done so well, making well into 6 figures these days, that there's a good chance you're familiar with his work. In fact, it might not be too much of a stretch to call him America's wordsmith.
If that's the way, if everyone agrees, everyone has to agree. Okay.
Who looks more puzzled, David Hoyt or these 5th graders? If your answer is David, that's okay. His specialty isn't solving puzzles, it's making them.
I have become the most syndicated puzzle creator in the world. Let's see if I move the B.
In the basement of his Chicago home, starting about 4 a.m. every day, he masterminds Jumble, that icon of word puzzles, syndicated in more than 600 newspapers, reaching about 32 million people every single day. When he's done, there are about 13 others to piece together.
I have word roundup, that's in USA Today. Up and downwards, that's in USA Today.
Not bad for a high school dropout who never went to college. He started trading options in Chicago, did pretty well, but it left him puzzled about his future. He'd noticed a friend was inventing games and making money from it.
I decided that I'm going to quit my job, I'm going to save up a little bit of money, and I'm going to instantly become successful. Well, that didn't quite work out.
He tried peddling this game and that in between part-time jobs for 4 long years. It was a struggle, but his cup-is-half-full attitude eventually paid off.
If I had been successful on my first one, I would have thought that I was much smarter than I actually was. It's like I needed no and then why.
In 1996, he brought a word game into Tribune Media Services, hoping to marry it to their Jumble brand. They bit and turned it into Jumble Plus. But that was just the beginning.
My brain just thought, wow, if they're willing to do this, maybe how about Jumble Crosswords? How about TV Jumble? How about Jumble Brainbusters?
It's no wonder Tribune's VP of Licensing, Steve Tippie, is one of Hoyt's biggest fans.
That's a good point. I don't know anyone out there who's made as many versions and iterations of a single word puzzle, Jumble, as he has.
He kept at the various jumbles for 15 years until in 2011, he took over the original when his predecessor retired, teaming with cartoonist Jeff Kanurik to breathe new life into a brand that's been around since the mid-50s. Hoyt's also developed word games for Pat Sajak's brand and now Wordwinder, where players aim to string words all the way across the board. Over beers at an English pub on Chicago's North Side, Hoyt and several friends polished a game they say has sold in the tens of thousands since it came out just last year, at about $20 each.
People have to work together.
The classroom version? That bright idea belongs to an Illinois school teacher who saw their demo at the Chicago Toy and Game Fair last fall. Now, Hoyt and his team are obsessed with finding a way to manufacture it at a cost schools can afford. It's a puzzle yet to be solved.
It cost $800 to make. Teachers have basically demanded that we do this because they're not taking no for an answer, and the kids just love it. So now we have to do this.
Next week, in fact, Hoyt and Company plan to begin a Kickstarter campaign to help fund production of the giant-sized Wordwinder. They hope to raise enough cash to get the price down to around $225 for schools. And coming up, the big business behind the most exciting 2 minutes in sports. But first, here's how commodities, treasuries, and currencies fared today. Tomorrow is the running of the 139th Kentucky Derby. The event, complete with all of the pageantry, the hats, the mint juleps, is much more than just a horse race, of course. It's a cultural event. And as Brian Shackman tells us, it is big business, too.
Everything about the Kentucky Derby is big. Big economic impact, more than $300 million just at Churchill Downs. Big crowds, 160,000 strong on race day. Big hats, and big price tags. Beyond the $2 million purse for the race itself, there is immense cost, from the optional luxuries of attendance to the necessities of racing.
Let's start with luxury. This just opened area is called the Mansion. It has all the amenities you might imagine from the name, including your own personal butler service and the best view at the track.
Prices to get into the mansion range from $7,000 to $12,500. How about this mint julep?
Mint leaves dusted with gold, Woodford Reserve bourbon, and a price tag of $1,000. As for the taste, well, you're gonna have to buy one for yourself.
Horse racing itself is incredibly expensive. Just getting the horses to Louisville can cost hundreds of thousands of dollars. Lines of Battle came from Ireland, basically in the horse version of first class.
In this particular situation, you know, a horse has made over $1 million on the racetrack, so the clients are willing to take and reinvest that money, and a significant amount of money, to win a big race like the Kentucky Derby.
That cost about $250,000, but a Derby win would triple that in prize money and millions more in breeding when he goes out to pasture. For Nightly Business Report, Brian Shackman, Louisville, Kentucky.
Coming up on Monday, we'll have my interview with Warren Buffett. And on Saturday, I'll also be tweeting what the Oracle of Omaha says on a wide variety of topics at the Berkshire meeting. And as we saw yesterday, Tyler, Buffett might be doing some tweets himself. I understand he already has more than 300,000 followers. So it'll be very interesting to see what he's going to be tweeting.
If there's another 82-year-old guy who has 300,000 Twitter followers, I'd like to meet him. He is a guy who stays hip beyond his years. I've never been out there to Omaha for this event, Susie. Give us some sense of the color and what your day is going to be like tomorrow.
Well, for starters, I'll start at 5:15 in the morning because Warren Buffett starts that early in the morning, and there are going to be something like 35,000 people who are coming from all over the world to hear everything that he has to say, and his sidekick, Vice Chairman of Berkshire, Charlie Munger. He's 89 years old.
Wow. What a day it'll be.
Yeah, exactly. Wow, it is going to be interesting. That's Nightly Business Report for tonight. Thanks for watching, everyone.
And I'm Tyler Mathisen. Y'all have a great evening and a fabulous weekend. We'll see you back here Monday with Warren Buffett.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Tyler Mathisen with a Nightly Business Report news brief. Good news about jobs powered the Dow and the S&P 500 to record highs today. For the first time ever, the Dow traded above 15,000 and the S&P closed above 1,600. The Dow surged 142 points higher today. The Nasdaq jumped 38 and the S&P was up 16. U.S. employers added a better-than-expected 165,000 jobs in April, lowering the unemployment rate to 7.5%, a 4.5-year low. And the numbers for February and March were revised sharply higher as well. U.S. factory orders fell 4% in March, mostly on a drop in demand for new commercial aircraft. And Apple is once again the most valuable company in the world, surpassing ExxonMobil after shares rose 15% in just the past 2 weeks. And tune into Nightly Business Report right here on your public television station.